Hey guys, it's Jay Kirkwood with Secure Financial Management with your economic update. Remember, at Secure Financial Management, we want to be your number one financial resource. And so today, the title of the economic update is called Stock Splits and Gold. Now, what do they have to do with each other? Nothing. But we're getting lots of questions about stock splits and investing in gold. And I suspect it's because that's taking up a lot of the time on the news. Financial news and even regular mainstream news as well. And you know the most popular ones you're going to see about right now, or you have seen recently, is about Apple and Tesla conducting a stock split. And you're seeing probably a lot of stuff about gold and reasons you should be investing in gold. And I want to touch on both of those topics. Let's start off firstly with stock splits. Let's talk about what they are, what does it mean, and is it a reason that you should start investing in those companies that are splitting their stock? So keep in mind that when a stock splits, it's no more valuable one day to the next. Okay, so Apple split its stock. It was trading at about $520 a share at the close of market August 31st, and it opened up at about $130 a share on the next trading day, September 1st. So if you had Apple in your account, and let's say you had one Apple share, well, now instead of having one Apple share at $520, you've got four Apple shares at $130. Fundamentally, nothing changed. The stock didn't get cheaper. You didn't get a better deal. The company hasn't become more profitable, less profitable. In fact, it's more of an accounting equation that has happened. So I would preach against going and buying a shares purely for that, right? Purely for the basis of a stock split. Now, the company itself, there might be underlying factors that make it a great investment, sure, and that's a different discussion. But the actual stock splitting, fundamentally, mathematically, accounting, whatever way you want to look at it, it means no different. Think of it this way, right? If I said I've got a great deal for you, right? I'm going to give you this dollar, and you got to give me 4 quarters. How much have you got in your pocket after that? You still got a dollar, right? It didn't change. The value didn't change. Now, you might say to me, yeah, but Jay, every time these stocks have split, they've gone up afterwards. And I wouldn't disagree with you, right? They do tend to rise after. Now, think of it this way as well, though, right? A company that is splitting its stock is probably a pretty strong company that's in growth mode, like Apple. So would that stock have continued to grow anyway had it not split? Probably. It's probably not growing just for the purposes that the stock split. Is there some sort of psychological element to it where a novice trader sees Apple at $520 one day and the next day at $130 and says, this is so great, I've only got $200 in my account, now I can buy a share? Probably some of that happens. But the fundamentals of the company have not changed. And just keep that in mind if you're looking at investing in any company that split their stock. Tesla also split their stock. I don't follow Tesla as closely as we follow Apple, so I won't talk about that too much. But it's the same function is happening. It's called a forward split. Okay, the opposite can happen too, right? You don't see it very often, or at least they don't talk about it as much. But you can have a reverse split. If a company's stock has become significantly lower, maybe instead of it being $10, now it's $1, they might do a reverse split. Usually it's not a good sign if you're having to do a reverse split. Now, instead of having 10 shares valued at $1, you have 1 share valued at $10. So splits work the same way, right? It can be a reverse split or a forward split. Now let's switch gears real quick and talk about gold. Lots of calls coming in from clients. I actually had a gentleman talk to me just the other day and said, Jay, I think we should get our portfolio fully into gold. That's where I feel we should be. So I'm not knocking gold. We're going to talk about it a little bit more, but we're definitely not putting 100% of our portfolio into gold, nor would you put 100% of your portfolio into any single investment or asset class. You lose your diversification when you do that. But gold is a lot on TV now. It's had a significant run up. You're probably seeing ads from companies that are trying to sell you gold, physical gold, right, that you can store in your house. So let's talk about why is gold becoming a topic that's talked about a lot. And there's some people that have made a lot of money investing in gold and trading gold. Gold is volatile though, right? Gold is not a guarantee, it's not a lock. It's typically used as a hedge for volatility. So when the markets are volatile, obviously gold is going to come up more and more in the conversation. It's also heavily used as a hedge against inflation. Could we be moving into an inflationary environment with the amount of money the government has put into the economy? Maybe. Is there a role for gold? A small portion of the portfolio? Perhaps. That could be possible as well. Gold doesn't have just positives though. Okay, keep in mind gold is a commodity. It's not going to act like a stock. It's not going to act like a bond, and it doesn't have the properties or values of those. Okay, keep in mind that gold, we don't have any way to judge its future direction, right? We just talked about Apple with stock splits. Let's stay with that company, right? We can look at Apple and we can get guidance from Apple. They can say, hey, you know what? We project we're going to sell X number of iPhones or iPads or whatever it is else that they're selling, right? They can say, hey, we're going to launch a new phone in the fall that has 5G capacity, and it'll be the first phone that's out there. I'm just giving examples, right? Apple hasn't, I don't know if they've said this stuff or not, but these are examples of projections and outlook and growth estimates that we can get from a company. We can have a price to earnings ratio on Apple. They pay a dividend. I'm not sure what it's trading at right now, but they pay a dividend. There's different ways that we can gauge stocks, sectors of the economy, things like that. With gold, we don't have that. Gold's purely a supply and demand. Is what price is someone going to bid for the gold that you have to buy it? There's also no dividends that are paid on gold, right? So we purchase gold and we pay whatever it's trading at right now, $1,800, $1,900 an ounce. Now, when we come to sell that, what can we sell it for? Well, whatever someone's willing to pay for it. Maybe it's the same price, maybe it's more, maybe it's less. In that time that we've held that gold in our portfolio, we haven't made any dividends on it. It's been sitting there and we've been hoping that we made the right allocation and that it's appreciated in value while we have it. Okay, so I wanted to share some thoughts with you guys there about two topics that we're getting lots of calls in the office about, and you're probably seeing a lot on the news about as well: stock splits and gold. As always, guys, nothing we talk about here should be considered a recommendation. If you want to discuss your personal financial situation, give us a call here at the office, 210-428-6250. We'd be happy to speak with you.